Getting a sense from what's been going to likely happen in trade today, come the medium term. Amit Jeswani, founder at Stallion Asset Management, is joining us on the show. Amit, good morning to you. Very volatile times, if I may say so. A lot of impact on individual news flows that have been coming in on various fronts: economic, geopolitical. Be it what the RBI does, what happens to the US-China trade war. How do you balance this out in terms of taking an objective market stance?
Hi, Devina. Good morning, and thank you for having me on your show. Devina, the thing is that for the last 14-15 months, there was some kind of lathi charge which was happening on all mid-caps. So there are three things which have changed. First, on the monetary side, after Shaktikant Das has taken over as RBI governor, I think he's probably the most dovish RBI governor we've seen in the last 15 years of me being in the market. So that is one thing is clear, that you cannot have 2% inflation and 7.5% bond yields. So I see the interest rates can and will go down in the next few quarters. So that will be one stimulus. After yesterday's airstrike, I think the political uncertainty will slowly and steadily keep going down, right? I expect like that this airstrike is gonna help Prime Minister Modi a lot in elections, and that confirmation will come once Nifty crosses 11,100. If Nifty crosses 11,100, that would be a breakout, and that would also mean that that the market saying that Prime Minister Modi is here to come. The third thing is that between October 2017 and December 2017, there were more than 500 stocks that were hitting new 52-week highs daily. Till last week, if you take the last 2-3 months, there were daily 500-700 stocks which were hitting 52-week lows. So if October to December 2017 was not sustainable, then today is also not sustainable on the downside. The small cap index is exactly at the same level where it was in 2008. So the BSE small cap index is at 14,000 levels broadly. So that's exactly the same level what it was in 2008. There's been no big movement. So we are now getting a lot more bullish. We've increased our equity position a lot more, and yes, so we've gone a lot more bullish. We're already 14 months in the bear market. This bear market, typically in India, bear markets don't last more than 15 months. So but yes, so we've turned a lot more bullish, but price action, like what will be the sector trends, that's where the big money will be made, and that is the most important thing that will that we need to watch out now.
Amit, good morning. Neeraj here. What's the price action in some select names telling you? And I'm using the Z Group as an example out here. The stocks have recovered almost all of, at least Z Entertainment has recovered almost all of the losses that it had incurred when this first news of this debt issues broke out. Is it symptomatic of a deal imminent, or is it that the market is shrugging off the blues because of the agreement that they've reached, and the market believes that at some point of time they will be able to strike a deal and therefore all is not lost?
I would not be surprised if the deal is coming out very, very soon. So the price action is very clear. See, typically, Neeraj, when stocks fall 40-50%, rarely do they recover. And like when a large cap stock falls 40% in like a week or something like that, they rarely recover. But when it recovers, understand that the market has extremely strong conviction. And for me, price action is telling me that Z deal is very, like, it's around the corner. But we don't have any positions there, of course, but the deal is definitely there around the corner. But I don't know, I'm not trading this.
Interesting. Okay. Yeah, and it's difficult to call this, so wouldn't even ask you to do that, but it's just interesting, the price activity that we saw in the Z Group stocks yesterday. The other pack, Amit, and where the commentary is chalk and cheese is what's happening to the auto pack. Today there has been an upgrade on TVS Motors. We've seen selectively people buying into some of the beaten down auto ancillaries as well. Mothers and Sumi a case in point, Jamuna Auto a case in point. People say that when you want to buy companies which are emerging from a potential down cycle, look at the leaders. Autos didn't go through a down cycle, but a terrible patch for about a quarter or so. Are you in the buying mode? And if so, are you looking to buy the leaders, whether it's two-wheelers, four-wheelers, auto ancillaries or otherwise?
Neeraj, we don't have any exposure to automobiles right now. Not that I'm extremely bearish on this space. Like there are pockets where I'm bullish, but we've just stayed away from auto. We need to see growth of, like if Maruti says that, if Siam says that we'll grow at 4% this year, that's not the space where I want to be when I'm coming out of a bear market. And Neeraj, autos were the leader of the last bull market, right? So the auto index went up 11x between 2009 and 2018-19. And it always starts with the leader going up, and then after 2015 the auto ancillary stocks went up 10, 20, 30 times. So when you go up 10, 20, 30 times, if you correct 10, 20% or 30, 40%, doesn't make you cheap. So that's not the space that I am investing. Not that they will not do well. It's a very secular trade, but I need right now I want a little higher growth also. I want 20, 25% kind of growth, because those are the stocks where you will see PE rating as well as earnings growth going up. So I want to play both right now, and now the choices are so many that you get a lot more grade here. So auto is not bad. It's just that we are not playing it.
All right. Lots to talk to you, Amit. Guys, thanks a lot for that. So a lot of those stocks that you need to keep an eye out on. Amit, coming on the last part that Nikki mentioned about the quantum of upgrades that are coming in on the South-based cement companies, margin profile likely to improve. But what's your sense of what could happen in the cement space?
This space is not something that we have a very strong eye on. So cement we've not been tracking lately. Like for the last 4, 5, 6 months, we've not tracked cement at all, to be honest. I'm sorry.
Interesting. Okay. So you don't quite find favor with cement. Do you find favor, Amit, with the metal names? Selectively, a clutch of people are starting to turn bullish in that commodity.
See, Neeraj, steel will do well. That is some space where we've traded in and out last year. But I'll tell you that in India, the capacity utilization is already around 80% for steel manufacturers. I can with a lot of conviction tell you, because we have clients who are steel company owners, large steel company owners. I can guarantee you these guys are not going to get any debt. Like no one's going to give you 6,000 crores for 1 million ton of steel plant anymore. Like no bank will be able to give you. So every year the capacity utilization will keep moving higher from 80% to 84, 87, 88. So in 3-4 years this sector should do really well. But typically, if we think about market cycles, market doesn't buy these commodities in the first cycle of the bull market. Like if we're looking at the first cycle of a bull market, markets will typically buy a little more quality names, less on debt, free cash flow. So those are the kind of things that market chases. So if you have a 3-year call, steel should do really, really well. After anti-dumping duties, like 2 years back, I see the sector is changing. The sector should do well. But do we have our investments in it? No, not anymore.
However, Amit, maybe a space that you look at and the beneficiaries or the companies which lose out in the gas distribution space. Now, the city gas auction outcome, Gujarat Gas applying for 7, they're getting 6. Mahanagar Gas not getting a single one. Some of the OMCs have backed about 9 circles too. Any thoughts that you have on these victories or losses, and more importantly on the space at large?
Neeraj, actually what we have done is we've narrowed our focus in this bear market to only 4 sectors, actually 3. So we're just looking at consumers, financials and IT. So we've just narrowed it, and at that too with a little higher growth. So in finance, like I'm not even tracking utilities, what's happening there. We've extremely narrowed our focus that we want these kind of sectors and we will stay with these kind of sectors in this bear market. So that is exactly what we've done. One space that I like right now, which I've started liking right now a lot, is microfinance. Microfinance went through demonetization and everyone wrote them off, but nothing happened, then there were loan waivers and these guys went through, and still, the NPAs never rose. Then there were elections, NPAs never rose, and now there is NBFC crisis, but they're still doing well. The business model, now that they have become like small finance bank, the business model is you lend like a bank and you lend like a microfinance and you borrow like a bank. So if you understand the spread, these companies will become 20-25% return on equity companies. Like Bandhan is already a 24-25% return on equity company, a 4% ROA and a 6% leverage. So these are the models which can actually scale up also very fast, and they have already like substantial, like this year itself, microfinance will grow at 30% plus. So, those are the kind of bets that we are looking out for. This gas distribution is a new space. I need to start studying about it, but we don't have a strong way over there as well. I'm so sorry. There are a few spaces that we've not concentrated very well in the last few months.
Completely fine. Point well taken. We'll probably talk about some of the pockets that you have concentrated on after we come back from the pre-open session. Okay. Amit, since we are on the topic and you mentioned, this is my final question to you really, on pockets that you are covering. The brokerage names are getting beaten down. IFL Holdings really being taken to the cleaners. This NSCL judgment as well on the commodity business not quite holding well. Others like Edelweiss and Motilal Oswal too under a bit of stress. What's your sense here? What do you do with this brokerage stroke diversified financial services names? I'll also include an MK and a JM Financial here.
See, I actually divide them in 2-3 different segments. Okay, IFL has got a great wealth division. See, all these guys have inferior NBFC businesses. None of them are like very high quality. It was a bull market, and the NBFC business for all of these guys is pretty mediocre. JM Financial, they're stuck with real estate holdings. Though everyone actually is stuck with something on another, or the whole pack. But if you see this, you need to see that how much is like Motilal Oswal. Even if it takes like a 10% NPA, it will result in 1 year's loss, like 1 year's profit going off, right? But markets will take it to extreme cheap levels, because when you have a good business and a bad business, the markets will always value the bad business only. So that is the rule of the game. So now they are all stuck with 10-20% of the business which is not so good, and that's the same thing which will happen with Edelweiss as well. Something that we might have vested interest in, we might hold, we might be super positive there. And so if you look at Edelweiss or any other business of that kind, they will have in the next bull market as well. See, as we go from 2.5 trillion to 5 trillion, there are two sectors that will give you outlier returns. That's going to be financials and your consumer returns. So globally that has worked well. So that's our main frame. Now we expect large profit growth to happen, but let for the next 3, 4, 5 months there should be no hurry to buy these stocks. But once the earnings cycle, you're confident of the growth coming back, these stocks will go up again. So you will find your Edelweiss trading again at a very higher level from where it is today if the ROE increases. So there are only, when I bet on a NBFC or a financial company, there are only two things I look at. What will be the ROE and who's the guy running the show. So there, you need to select your promoters. You've got Rashesh Shah, you've got Ramdev Agarwal, Motilal Oswal. You've got so many good promoters out there. Our pick is Rashesh Shah. We believe in the diversified business model, and I think these companies will have 3, 4, 5x higher profits. Like Edelweiss will do 1,000 crores of profit this year. I might be super wrong here. Please, I have vested interest. Don't take this very I might have vested interest, but I expect Edelweiss to do 4,000-5,000 crores profit in the next 5 years. So those are the kind of bets you have to take. So I am very positive on Edelweiss for now. I see the NBFC crisis to be over in the next 6 months. So 6 months is the maximum time of pain that we will have to have. But remember, we have 15-20 stocks of scalable businesses. This is just one of the stock that we hold. And Edelweiss, I think, should do well. I think it should do a 4,000-5,000 crores profit in the next 5-7 years.
All right. We leave it at that, Amit. Thanks very much for joining us. Appreciate you taking out the time.